SCORE Northeast Wisconsin and WHBY are pleased to bring you Biz Talk, a chance for you to hear from entrepreneurs and professionals as they share their experiences. From starting to sustaining growth, learn the skills needed for your business to be successful. If you miss anything, you can catch the Biz Talk podcast at score.org/Northeast Wisconsin. And now from the Myron Construction Studio, it's Biz Talk on WHBY.
Good Saturday morning to everybody. Thank you for joining in and welcome to our first show of 2026. We really appreciate having you here. This week, I'm the solo host. Unfortunately, we wouldn't have somebody joining us, but we do have a guest who can carry the show anyhow. So joining us this week is a longtime sponsor and regular guest, Kurt Heling from Heling and Associates. Kurt, how are you doing?
I'm doing well.
Excellent. So this show, we're going to talk about a number of different things, but one of the things that has come up recently, we've seen a lot of, is around the whole complexity of the tax code and what that means for taxpayers and CPAs. So let's start with that a little bit. Talk a little bit more about how your clients, when you're working with them, how high level is their understanding of the tax code, and how do you work with them on that?
Well, one of the things, I had some time off over the holidays, and one of the things I was reading online, there was an article out there through the Independent that said too many Americans struggle to understand basic tax concepts. Here's why it's a problem. And the subheading was, a recent survey revealed that most Americans lack basic tax literacy. And what they talked about in the article is there's only 2% of the American population that would be considered to be proficient in understanding the tax code. And not even half were even fundamentally understanding. And what they meant by that was that there was no understanding as far as things like, what taxes due when, or what forms are due when, how tax is calculated, the difference between, the politics of the tax code, the policies behind it. And in addition to that, just the basic fundamentals that people run into where, I've got this much withheld from my check every 2 weeks when I'm working for somebody. I go to do my tax return. Do I want a big fat refund? Do I want to owe money? Do I want to break even? How does this all come together? There's a real fundamental disconnect there as far as that goes. And so that's one of the things that the article went into, and we can talk a little bit more about how it applies to our business owners that our SCORE people are working with, as well as individuals.
So do you see that regularly during the tax season where people come in maybe thinking it's easy, it'll be an easy job for you to do their return, especially new clients?
Well, the first thing is, yes, they think they've got an easy return. And just when you go down the basic checklist of questions, are you married? Are you divorced? Are you single? Do you have kids? How old are the kids? Just all those basic questions, each and every one of those questions has tax implications. And we haven't even gotten to the financial part yet. Then you start getting into, what did you make? Were you an employee? Were you a subcontractor for somebody? Are you in business for yourself? Do you have rentals? Do you have investments? You start getting into that. Every one of those areas has its own set of rules associated with it. And then we haven't even gotten to the business owner part of it, of, how much money are you taking in? How much are you spending? Do you have employees? Are you paying your payroll? Do you have people that you're responsible for payroll taxes for? Do you have contractors? Or should your contractors really be considered employees? Are you subject to should you be charging your customers sales tax or not? There's a whole list of issues that way. And that's just walking in the door in the first 5 minutes, talking with somebody. So the person who thinks they've got a really easy tax return, it's not as easy as just checking some boxes and filling in some numbers. And you hear some things sometimes, AI is going to totally replace accounting and do all the tax returns. AI can do some of that work. In fact, we see it now already these days because through AI, we can have, bank information downloaded into QuickBooks, for instance, or downloaded into other software programs, so that all the business owner or their staff needs to do is go through and categorize that information. But you still need that set of eyes to categorize it. It can't do everything for you. It does a whole lot more than it did 10 years ago, but at the same time, if it's like anything, if it's not set up properly on the front end, you're going to have garbage on the back end.
And I've been thinking this week, actually, as I was looking, I turned 65 later this year. And so I was looking at some of the deductions. So if you're somebody out there over 65, you've got new deductions for being over 65, but depend on your income. You've got charitable deductions that now can be deducted in certain ways. You have the old deduction for being over 65. And all these things come together. And if you don't get it right, you'll be either vastly overpaying or significantly underpaying your taxes.
Yeah, there's a whole list of things that come into play with respect to turning 65, and some new ones now this year with the new tax rules that came into play. We'll get into those later. But yeah, 65 is one of those red letter birth dates that a lot of things change when you turn 65, and a lot of things that you need to watch out for from a tax perspective also, because at 65, most people are going on Medicare at that point. So health insurance itself isn't an issue, but you've got to watch your income from the standpoint of, there's an animal out there called IRMA, which is an income-related item where you need to watch out that your income doesn't get too high or your Medicare premiums go up down the road. So that's one of those things that you need to watch out from that standpoint. So
I was really surprised to see how much it can go up too, because it was like from $150 to over almost $600 a month if your income's high enough.
Oh yeah, and it's one of those things where there's no sliding scale. If you go over that threshold by $1, you pay the extra 40%, or it can double or even quadruple depending on how much income you have for a particular year.
So with all of these things factoring into an individual tax return, why should an individual use get a tax professional, such as a CPA, to do their return?
There's a couple reasons. One is because the CPA or the tax preparer is going to be able to identify, number one, the items that are needed from the compliance standpoint. The W-2s, making sure it gets reported properly. Any 1099s, making sure they get reported properly. So step one is making sure the compliance gets done properly. But step two then is taking a look at making sure that you get everything you can from the deduction and credit side. For instance, are you able to itemize or not? There's some things that changed this year with respect to that. Are you eligible for certain credits? Did you adopt a child? There's credits for that. Your children that are under 16, there's one set of credits for that. If they're 17 or older, there's a different set of credits. If they're in college, there's a set of credits. If they're in daycare, there's a set of credits. All these different things have their own set of credits, and if you're not aware of them, you go to do it on, say, a TurboTax or something, it's going to make you can be losing out on money that you're entitled to. So you've got that end of it. And then from there, it's a matter of tax planning, both on an annual basis and making sure that you're getting the most bang for your buck from a tax perspective annually and then long term. And that's when you start getting into things like traditional IRAs and 401ks versus Roth IRAs and Roth 401ks and doing Roth conversions and things like that. And those are things that affect your entire lifetime. And can even affect your beneficiaries down the road too, because they inherit that money. There's rules that affect them with respect to IRAs and Roth IRAs, so it can have long-lasting implications. So doing it properly up front can have implications that affect not only yourself but your beneficiaries down the road. So it's not just a $300 tax return.
So how and when should an individual find a CPA?
The when part of it, I would say any time that is not between January and April 15th, because the CPA is going to be busy and they're not going to want to talk to you, and a lot of them aren't taking on new clients these days. The time to find the CPA is in that what you consider the off season between April 15th and the end of the year. Get a relationship with them, make sure you're comfortable with them, and then in the process, talk to them about some of these implications that, not just on a year-to-year type basis, but a long-term implication. What are your goals long-term? What are you going to need to do long-term? What do you want your kids to have? Some of those types of things that almost cross over into financial planning in a way, but in a sense, they're really tax-related type things. We're not dealing on the investments and where the money is sitting, but you're talking about what the tax umbrella of that is and how to handle it.
Okay. So right now we know there's a shortage of CPAs out there. Why should somebody consider becoming a CPA?
There is a lot of interest in working in the financial world, whether it's the CPA or other types of financial areas. The CPA side of it, I said before, you read these things where AI is going to replace it. I don't see that necessarily happening, that AI is going to replace the CPA. It's going to enhance the CPA's job. It's going to change the CPA's job. But you need somebody who's really got an analytical viewpoint to manage that data and be able to give good advice. I don't see where AI is going to be able to turn around and help on the advisory standpoint. And I think that's where people are going to be able to really help clients out in the future. And that's where I think that's where the future of the industry is going.
The other thing I'd say is that when I was coming out of graduate school, I had a marketing professor told me to go get an accounting job. And I did with a industry in the industry, and knew I wasn't an accountant after that year. But the best single learning experience I had was that year as an accountant for a large company. It was incredible. And I still look back and say, boy, I hated every minute of doing the job, but I learned more than in any other job. And strongly say, even if you're not sure where to go, you can become a CPA. Many people will love it. Others, it's a great background for other roles in the future too.
It really is, especially if you work in a business standpoint, like you just mentioned, where if you're working as the internal accountant, you get a foot into every aspect of the business, because you've got to deal with the sales people and marketing people. You've got to deal with the administrative people. You've got to deal with outside contractors, outside vendors. You've got to deal with governmental and taxing authorities. You get a real understanding of what it takes to run a business and manage a business when you've got that accounting background. And even if you're not doing 100% of the details of it, having that understanding of what needs to be done and at least knowing to ask the question gives you a good background. Otherwise, you can be flying blind and not knowing what you don't know, and that can get you in trouble.
Yeah, and I'd say even to this day, I still use some of that accounting background. I've got my accounting designation over here in the bookshelf, and I still use some of the stuff. I pay my dues, but I don't. I'm a member, but I'm retired now, so I don't have dues, but I'm still a member. But don't use it in terms of professionally, but it was good.
It kind of goes full circle. It kind of goes full circle to that whole tax literacy thing in that article too, because as a business owner or working with a business owner, the business owner's got to understand, when is their income tax due? What forms are they responsible for that? Payroll taxes, when are their payroll taxes due and what are they responsible for that way? Unemployment, Social Security, Medicare, and then sales taxes. Are they required to charge sales tax or not? And on which products are they required to charge it? And when are those due? You got to have that background or you're going to get in trouble real quick.
Yep. All right. We've reached the point where we're going to take our first break. You're listening to Biz Talk with Score on WHBY, and we'll be right back after these messages. Welcome back to Biz Talk. We're glad you joined us this morning. Our guest is Kurt Heling with Heling & Associates. a longtime sponsor of the show. Before continuing the conversation with Kurt, I'd like to tell you about SCORE Northeast Wisconsin. SCORE Northeast Wisconsin serves an 18-county area in Northeast Wisconsin, plus the county of Menominee in Michigan. With approximately 25 volunteers, each an expert in their field, SCORE offers entrepreneurs no-cost and confidential mentoring. Those areas of expertise include IT, social media, marketing, cash flow, strategic planning, HR, and many others. In order to register for a no-cost confidential mentoring session and learn more about SCORE Northeast Wisconsin, visit our website at score.org/Northeast Wisconsin. You can learn more about how the SCORE chapter can assist you with starting and growing your business. And then you can complete an application for a mentoring session. Simply complete the online form and submit it. Within a few days, a SCORE mentor will be contacting you to set up a meeting. Remember, SCORE is no cost and offers experts who can offer you assistance in many different areas. To get started, visit our website at score.org/Northeast Wisconsin. To support small business, SCORE Northeast Wisconsin is always looking for new mentors. If you have experience that you'd like to share with others, we'd love to talk to you. We welcome volunteers with experience in all aspects of business. Small business owners need your help, and your experience can make a real difference to their success. Again, go to that website, score.org/Northeast Wisconsin, and click on the volunteer button and fill out the short application. We'll get back to you to explain more. Thanks again for joining us on Biz Talk. Now I'll turn back to Kurt. And Kurt, one of the other articles you sent from reading over the holidays is just on not just tax literacy, but financial literacy in general. Can you talk a little bit about that article was talking about and how you see that playing out?
So yeah, this one I found on Yahoo Finance, and it was from Kevin O'Leary. And if you don't know what Kevin O'Leary is one of the mainstays on the show Shark Tank. And I'm going to go off on a little bit of a tangent here with respect to Shark Tank. Every one of our SCORE people, the business owners who are using SCORE, every one of our businesses that are in that startup stage, even if you're established, should be watching Shark Tank on a regular basis, because you've got to be able to answer the questions that these investors are asking the business owners that come on this show. It's almost like it literally is going to the bank in a way. These people are investing in these business owners' businesses coming on there. And you've got to be able to come up with the answers to these questions on a moment's notice, just like these business owners. They're going to be much more high level than maybe you would get with the bank. You know, they're not going to ask, you know, what's your work comp going to be for next year? What's your health insurance cost going to be for next year? They don't get into that kind of detail, but they do talk about the big picture. And you've got to be able to answer that and understand your business and know your numbers cold on a moment's notice, just like when you're talking to the bank. But Kevin O'Leary is one of the mainstays on that show from an investor standpoint. One of the things he brought up in this article, he says, broke people spend $15 on salads for lunch, but say they can't invest, and they're trading $500,000 in wealth because they're too lazy to cook. And it goes into the detail of one of the things that happens in our society. People go out, they're spending $10, $15, $20 on themselves 4 or 5 days a week for lunch, and then saying, well, I don't have any money to put in my 401k, I don't have any money to put in my Roth IRA or whatever. And when you do the math on it, taking that $50 or $75 a week over the course of a year, you know, average American spends $4,000 a year eating out. If you took just part of that, take $3,500 a year annually over 30 years, get a 10% return, you're going to have over $600,000. Okay? And Kevin says you're trading $500,000 in wealth for the convenience and fancy meals you forget about in 24 hours. People aren't conditioned to think that way. They're not conditioned to think long term. We're in such a immediate gratification type of society that people don't think about these things long term. And that's one of those things that really struck me when you do the math on this one where AI can come in really easy. Any program, you plug in those numbers. You can go to our website and plug in some numbers, and it'll tell you what those sorts of returns would be over the course of time. That's why you see people. I've got a client of mine that I've had for over 20 years. This couple took sack lunches to work, scraped all the way through. Now he's in his late 50s and everything's paid off. The kids are out of college. They don't have student loans and he's ready to retire. Everything's paid for and he's got 7 figures saved up. He's set. So, because he took the time and energy early on, he's got himself set up for retirement at an early age, and he doesn't have to worry about, where everything's, how things are going to get paid for. And one of the things I've noticed with people as they get older and have that mindset, savers don't all of a sudden turn spenders when they hit their 60s. You don't all of a sudden go from saving $40,000 a year to all of a sudden spending $100,000 on a car when you've never spent more than $30,000 on a car in your life. That mindset doesn't really change, but you've got options, you've got the potential to do things, and you don't have that cloud hanging back going, okay, how am I going to pay for this?
Yeah, and interestingly, as you look at the spending and that people are making, there's a lot of things I see, and I've seen it from a few people, where it's so easy to sign up for subscriptions now that you end up literally paying hundreds of dollars every month. And unless you're using those subscriptions, you should just get rid of them. But people, and that's actually where AI can help you too, because it can look at your stuff and tell you what you're spending on, and you may have even forgot about some of that stuff.
And you've got there is software out there now that you can have scan through your bank accounts and credit card accounts to verify that and find those. And you can look at them and say, I haven't used this subscription in, 6 months or 2 years, and whether it's a TV subscription or whether it's a fitness subscription or whatever it might be, you can get those things out of the way. On the flip side, these businesses have figured out that's easy money for them because they're collecting money and they don't even have to provide a service.
Yeah. And so I'll use an example with my son. He doesn't listen to the show that often anyhow, so he won't get mad at me. But when he moved from home last summer to his new apartment, he had to save money. And so we had him over several months go through his bank account and identify all those subscriptions. He saved hundreds of dollars a month. He had a subscription to just about every streaming service out there, all different sports services and stuff, and he was hardly watching them. He dropped most of them, and all of a sudden the increased cost for having an apartment was able to offset a large portion of that. So,
and he probably didn't miss anything that he got rid of.
Nope. If he does, I'm sure he has figured out how to do something else in its place. So anyhow, we are going to take our second break. You're listening to Biz Talk with Score, and we'll be right back. Welcome back to Biz Talk with Score. As we've mentioned a few times in the past, there's been some significant changes in the way Score is operating. We don't have any funding from the federal government anymore, and so we're raising our own money. And one of the ways we do that is with certain national webinars, we do have a small fee for them. We still have thousands of webinars without fees, but for those larger national ones where we do bring in experts, there's a small fee, usually $20, might be $25, might be $10. But I wanted to mention that because there's a couple courses coming up that are webinars that may be of interest to people. The first one is on January 15th, and it's Small Business Website Essentials. Attract, engage, and convert with your website. So that's January 15th at 12 o'clock, and it's $20. And a second one related to your website is Major SEO or Search Engine Optimization Changes in 2026. Will your website still get found? So that's on January 2nd at 12, again, $20. But those are both two courses where you can go and get expert assistance on thinking about your website, how you manage it, and how you make sure it's keeping relevant. Because just as with the talks today with the tax laws and financial changes, the websites and technology change a lot too, and you got to make sure you keep those relevant. So those are two courses to think about. Again, go to score.org/Northeast Wisconsin and click on the websites and events tab. You'll find both national and local events depending on what you search, but there's a lot out there to help you learn as you run your business. So with that, we're going to turn back to Kurt. And Kurt, let's start with small business owners now. And when a small business owner comes to talk to you, what should they be asking you?
Well, so a lot of what we talk about with small business owners is, especially in initial meetings, is how are they structured from a tax standpoint? Are they a sole proprietorship, a partnership, an S corp, or a C corp? And you'll notice I didn't mention LLC in there because an LLC is not a tax entity. A lot of our businesses are structured as LLCs for legal purposes, for the liability protection. And remember, LLC stands for Limited Liability Company. But from a tax perspective, is that LLC taxed as a sole proprietorship, partnership, S corp, or C corp? Because that has a lot of bearing on what makes the most sense for the business owner. The sole proprietors, you go back to the old rules of, everything you make in the business is taxable and subject to self-employment tax. And that's where we recommend a lot of times, if your business has a fair amount of profit, and that number can be kind of nebulous, but probably somewhere in the $50,000, $60,000, $80,000 range regularly, and that's not a hard and fast rule. That's kind of a rule of thumb. It might make sense to switch that business to an S corp. Then the owner takes payroll, and if they need to take a reasonable payroll, that payroll is subject to Social Security and Medicare, but the rest of the business is not. There's a whole lot of payroll processing things that need to go along with that, but that's where we get into what makes the most sense for that business owner from just the standpoint of how is their business structured from a tax standpoint. So that's number one. The other thing we talk about is if they have employees, if they have contractors, are their contractors really contractors or should they be classified as employees? And some of those can be very gray areas depending on how much work that contractor does for your business. Do they look, smell, feel more like an employee? You're telling them what to do, when to do it, how to do it, and giving them the tools to do it. Or are they truly coming up with their own vehicle, with their own tools, on their own time, and you just say, I need this project done by X date, and you're doing it for a fixed fee? That's going to smell a lot more like a contractor. And there's a whole set of criteria. There's actually different criteria for the federal government and the state government, and work comp all have different criteria as to what defines a contractor. So, and I will tell you that the state is actually stricter than the feds are on this. But the penalties from the federal standpoint are much more. So you want to be compliant on that. But those are all things that business owners are talking about, and also talking about what can they work with. How can they maximize things from a tax planning standpoint? Are they taking the correct salary? Should they be paying their kids out of the business? Are their kids working in the business? How much should they pay their kids out of the business? If their spouse is working in the business, should the spouse be on payroll? What kind of retirement plan should they have set up for the business? There's a whole litany of questions that the business owner can have, and we haven't even gotten into the operations side of the business. And again, we mentioned sales tax earlier. Should they be paying sales tax? Are they charging sales tax on the correct things? All those sorts of things have an issue in there. All those are questions that the business owner should be asking the CPA early on in the process of working with them.
One thing you brought up, and I just wanted a little more information on it, is how do you define a market-based salary? How do you know if what they're paying themselves is reasonable?
Well, that's when you look in the tax code, they don't give a very good definition. Yeah. There's some case history that says, what would you have to pay an outside person to come in and do the same job you're doing? And of course, you would pay them as little as possible, right? Because that, and get as much work out of them as possible. So there's a couple of, it needs to be a reasonable salary from the standpoint of, there's case law. There was an attorney who also was a politician. I can't remember who the politician was, and I'm not sure I should even name him if I could think of it. But he was also a partner in a law firm, as many politicians are. His salary at the law firm was $30,000. No attorney works for $30,000. His distribution of profits from the law firm were $300,000. IRS found a problem with that. Not a good balance.
Yeah.
One of the rules of thumb out there is, if in doubt, don't take more in distributions than you're taking in payroll. And the distributions are distributions of profit from your S corporation. That, if you do that, I can't guarantee that you're not going to have a problem, but more often than not, that's going to be considered to be a reasonable salary.
Okay. So every year it seems like the tax code is getting more complicated, and small businesses long ago should have learned not to do their taxes themselves. But as you look at what's happening this year, what stood out for you as something that small businesses really need to be thinking about given all the changes that are happening?
Well, a lot of it really falls more on the individual side than the business side, but there's a couple of things that overlap in there. So we heard a few things. Number one, there's no tax on tips starting with 2025. And this is retroactive to January 1st, which is really unusual for tax changes. So starting with 2025 tax returns, the ones you're working on right now, there's no tax on tips. There's no tax on overtime. The tips, so you hear people saying, well, I'll just pay my employees the minimum and then we'll just have everything else be considered a tip. Of course, the IRS is going to smell that out real quickly. So there's only certain industries, service industries like bars, restaurants, personal service industries, things like that, where those tips are considered to be excludable from income. The overtime, it's not the entire amount of the overtime. It's just the half of your time and a half, for instance, if that makes sense. That portion is what's excluded from your income. And I've talked to people already that have said, well, I get 40 hours, 20 hours, work 40 hours and I get another 20 hours of overtime. That whole 20 hours is excluded. No, it's not. Just that extra portion is what's excluded. So that's one of the things that comes up. Then there's one that's really interesting, and this started to be a political football back in 2017. 2017, there's an animal out there called SALT, state and local taxes, which is your state withholding, your state estimates, your property taxes, and that all falls into your itemized deductions. That got limited to $10,000 starting in 2017. And it really put it at that point, and they also raised the standard deduction. So at that point, 90% of tax filers were no longer itemizing. Now this year, with this set of rules, and again, this retroactive January 1st, your state withholding, your state estimates, your property taxes are deductible up to $40,000. Now there's some income limitations with this. There's income limitations with all of these rules we're talking about. But it's $40,000 now that you can deduct in state and local taxes. That's a big jump. Now we're going to see more people itemize it. Now we get back to the situation that we had years ago of, do I double up on my property taxes? Do I double up on my state income taxes? Things that we really didn't talk about for the last several years come back into play again. So that's one of the next big ones. And then, as we mentioned earlier in the show, when you turn 65, there's a new $6,000 deduction for those individuals that are 65 or older. That wasn't out there in the past. And this is a deduction, again, it's limited. There's income limitations on this. This limitation is over and above the standard deduction. It's out there. Even if you itemize instead of taking the standard deduction, you get this $6,000 deduction. If husband and wife are both over 65, they get a $12,000 deduction for this. Now, there was a half-truth that was told by our politicians. Imagine that. there was a statement made that millions of Americans will no longer pay taxes on their Social Security. That's true, but we didn't eliminate the tax on Social Security itself. Social Security is still taxable. But we have a situation now with this additional deduction of $6,000 and $12,000 for a married couple, where that deduction offsets the taxable portion of Social Security. And there's issues with respect to how much Social Security gets taxed and when it starts getting taxed. I could get on my soapbox about that and do a whole hour show just on that if I wanted to. But there is still tax on Social Security. It's just less of it gets taxed if you fall into the income brackets where you get to use the $6,000 deduction. That's what they're talking about when they're talking about Social Security not being taxed. This offsets the taxable portion of Social Security. Not completely, but a portion of it.
And so it's, if I understand right, it starts to be eliminated at $150,000 for a couple and is completely gone by $250,000. Is that roughly right?
Yep, that's you're in the ballpark on it. Yes. And then if you're single, there's different limitations. Yes.
Yeah. But it all comes back to, again, the tax code's getting more complex almost every year. And unless you feel really comfortable with it, you're just far better off, especially as a business, to have a CPA get involved and look at your returns.
Well, right. And especially, going back to that article we talked about earlier in the show, 2% of the population can be considered proficient. So there's 98% of the rest of the population who should not be getting knee deep into this stuff.
Yeah. And I guess that when you look at both the state and the federal, there can be some fairly significant fines if you're doing things that could be considered, I don't want to say shady, but maybe they look quite wrong.
Well, and that's the thing. It's not even a matter of being shady, but just an honest mistake can get you love letters from the IRS that are, given the state of the IRS these days, it's impossible to get a live, warm person to talk to, and writing letters and getting a person to read it and explain the situation is next to impossible. So you can be in a situation where you've got IRS correspondence going on, they get a collection agency involved, and all these things can be going on for something that was just either a simple oversight or a misunderstanding, or you've got the information on the return but it's in the wrong spot. Any of those things could trigger that.
So I'd like to switch now back to artificial intelligence a little bit and technology in general, because how has that impacted the CPA firm in the last 10 years or so?
Well, it's really made a huge impact. It's made CPAs less, I don't want to say less detail oriented, but they're doing a lot less data entry type stuff. Now we're doing a lot more things that are getting downloaded, that are getting brought into software systems, and it's a matter of analyzing it and correctly allocating those sorts of things. So, the green eye shade type thing, the calculator type thing, the computer keyboard type thing, a lot of that has changed in its function, and it's really more a matter of analyzing and categorizing on the bookkeeping and accounting side. And then from there, getting into the tax planning side of things as opposed to the data entry side of things.
Okay. And so do you have to update software almost every year then as technology?
Almost every year. Well, we update software every year. We update software multiple times a year in some of these situations, not just because of tax code changes, but then software efficiency changes and things like that. So, our tax software, for instance, we've got that coming in for 2025. Typically what happens at the beginning of the year, especially a year like this where we've got a lot of new tax law changes, the forms aren't filed at the IRS yet. Once they get finally at the IRS, then they've got to get them to the software company. Once they get them to the software company, they get them to us as the software users, and those updates are going to be happening probably weekly once we can start processing tax returns later this month. And then on top of that, each year's tax software stands on its own, but then, things like our accounting softwares as well, those get updated for payroll table updates. They get updated for different enhancements that are made to the softwares on a regular basis. So it's not even an annual type thing. It's multiple times a year.
And then when you step back and look at what a CPA has to do now, the changes, people may have a different perception of what a CPA role is based on history versus what it really is today.
It's very different today than what a historical standpoint would have been, yes.
Okay. So, again, for everybody out there, make sure if you need help, go early, but two, be very careful of what you do because there's consequences of getting your tax return wrong. So you're always better off, or often better off, to talk to a tax professional and get it done right. It is just too complicated. So a lot of different things we talked about, but we'll be back to continue the conversation in the fourth segment. You're listening to Biz Talk with Score and WHBY, and we'll be right back. Welcome back to Biz Talk. We'd like to thank our sponsors for their generous support of Biz Talk. Thanks to Kurt, Heling & Associates helps small businesses and individuals not just prepare tax returns, but plan for the future. Heling & Associates, personal connection, positive results. Wherever you are in the life of your business, Johnson Financial Group works to match the banking and wealth services needed to help you complete your mission. Thank you to the Business News for promoting our program in the biweekly business newspaper serving Northeast Wisconsin. With the latest business news and topics for this region, make sure you get a copy. We are grateful for the support of Community First Credit Union. At its core, Community First is a community of member owners where people work together to improve their financial well-being and help one another. New North, the Regional Marketing and Economic Development Corporation, is an active supporter of SCORE. The New North facilitates economic growth and helps people in this region live their best lives. Since 1919, Baird has guided families through investment, trust, estate, and tax planning advice. So no matter what the future brings, you can be confident you're ready because your family is Baird's focus. And finally, we'd also like to recognize the David L. and Rita E. Nelson Fund within the Community Foundation for the Fox Valley region for their generous donation to Biz Talk and SCORE Northeast Wisconsin. And with that, would like to recognize again the sponsors. We're to a full core of 5 sponsors plus 2 partners, and we really appreciate all those helping us. And turn back to Kurt. And Kurt, could you let listeners know how they can contact Heling & Associates?
Yeah, they can find us on the web at helingandassociates.com, Heling and associates.com. They can call our office, 920-886-2241. We're located in Fox Crossing outside of Neenah, 1977 American Drive, and we've got client base throughout the valley. We've got a landing spot up in Green Bay, so we can really help service people throughout the valley and northeastern Wisconsin.
Okay. And so as we wrap up the show, are there a few key points you want to leave for our listeners?
Well, I think that number one is understand and know what you don't know about the tax code and getting involved with an accountant that can help you with that. Right now we're getting towards the beginning of tax season. It's the middle of January. Now is not the time to start thinking about your taxes. That probably should have been done earlier on in the fall and November, December time frame. But if you haven't, find someone that can help you with it. Talk with someone. We can talk with people in our office. And at that point, we take a look at, your situation, whether you're a business owner or individual, see if things are structured properly. And the biggest thing I can say goes back to the old proper planning prevents poor performance type thing. And when you have that from the tax perspective, you'll be able to maximize things as much as possible.
Okay, and thanks again, Kurt, for both your sponsorship and being a guest on the show. It's always Rick, in a sense, who couldn't make it today. Always says he loves just listening in on the show because you bring so much knowledge about this whole area, and it's great to learn from you. So we really do appreciate it.
Always a pleasure.
Okay. So you've been listening to Biz Talk with Score on WHBY. You can go to our website and find out old episodes of the show, or you can catch us on podcatchers everywhere. We will see you next week. Thank you. Bye.